What's happening, traders and investors? It's Rod with Pow Group. Welcome back in the Pursuit of Wool. Today's Saturday, January 29th. I hope you were well today, and happy Saturday. In today's video, we're going to be discussing the stock NIO and what to expect in the days and weeks ahead. We had a monthly downtrend confirm. We had a Pow algorithm sell alert with medium to long-term bearish evidence that went off as well. We're going to go over some signals that we could have potentially utilized to avoid some of this downturn or to have been better prepared for it. So before we jump in, make sure to smash like, subscribe to the channel, tick the bell, you'll be notified on any future uploads. We'll start off with some technical analysis here on NIO. So we'll start off with all the way back to about October on the low here of 119. We had the high of the bounce at 565, and then we had the COVID dump there from the Black Swan event, and we had a low of 211. As soon as we broke that resistance at 565, that confirmed a monthly uptrend. And even if you just entered on that monthly uptrend confirmation and that break of 565, you would have saw some upside of about 1,000%. So that's about a 10x. But if you entered around that 119 low from back in October, and the reason why I bring this up is just to show you how much we've ran. So that's about 5,000% of upside that we saw on the NIO chart, and Tesla went absolutely parabolic. We saw the S&P 500 over double. So this is the everything bubble of 2022, and nothing goes in a straight line forever. So we had that monthly uptrend confirmed, but then after that, we just went absolutely parabolic, and we had a monthly higher low. If we just count the candles here, we've got 9 months in a row where we had a higher low every single candle. So the one thing that you should note, take a mental note of is when we see a monthly uptrend like that and we have no consolidation, to expect a pullback eventually, right? Nothing's going to go up in a straight line forever. So the very simplistic view of this was, as soon as we lose the low of the previous month, I'm out, right? I'm exiting all bullish positions. At this point, I'm up, 5,000% or I'm up 2,500%. That's $1,000 into $50,000 if you just put $1,000 into NIO back in October of 2019. Or even if you just did it here on the March 2020 lows from the low at 211, you're looking at 3,000% of upside. So $1,000 into $30,000 a year later, you have to expect downside. We also had this uptrend line here, this green line. As soon as we lost that and rolled over, even if you would have just exited once we lost there and we closed the monthly candle outside of that, that would have saved yourself about 55% of downside. Or what I was telling people to do back in that time, as soon as we lost the low of the monthly candle, exit your long-term positions. Again, I'm not telling you to buy, sell, or hold. I said that's what I would do. And if we take a look at how much we dropped since we lost the low of January and February, that would have saved yourself 60% of downside, 60 plus. Again, nothing goes straight up in a straight line forever. And then the monthly downtrend ensued. We had the lower high. We had the high of the bounce at 66.99. We had the low of the pullback at 30.71. We formed a lower high here at 55.13. And then once we lost 30.71, we confirmed that monthly downtrend. But now we're forming a bit of a falling wedge here. You could consider it a channel, but I would say it's more of a falling wedge at the moment. And we're likely due for a bounce, right? We're likely due for a monthly lower high. I think we could go as high as $25 to $30, probably the most likely. But if we do see a huge relief rally, which I'm expecting in the broader market, the S&P 500, the tech sector, we could jump all the way up here to about 41. But anything here under 44.27 is just a monthly lower high in this continuation of the downtrend. So we've got a lot of, we could bounce from here on the NIO chart, from the low, we could bounce 125%. and still just be looking for a lower high. So I think NIO is a great opportunity here for those with some risk appetite. But keep in mind, even from the low of March 2020 to where we are now, we're still up over 7x, right? So there's definitely room for more downside. We could go to monthly oversold if you're looking for long-term positions. Maybe you want a dollar cost average. Maybe anywhere under $20 or around $20. You want to start dollar cost averaging. Maybe you buy a bit more if we hit 15. Maybe you buy a bit more if we hit 10, and then you look for that monthly higher low. Maybe we pull back to around $10. That's another 50% from here, right? That's some substantial risk. But maybe you're a little bit more patient. Maybe you're waiting for daily uptrends to confirm. Maybe you're waiting for weekly uptrends to confirm. There's no right or wrong way. It's just only your way. You need to look at it and say, okay, this is the amount of risk I'm willing to take, or I'm a bit more patient. I'm going to wait for daily uptrends and weekly uptrends, monthly uptrends, or maybe you're super aggressive and you're just dollar cost averaging, right? We had multiple weeks of heads up, like I said, on the weekly chart. We're also in a downtrend. On the monthly chart, we're in a downtrend. If we take a look at the weekly chart dating back here to February of 2021, you can see here that that's when we finally started to see those macro indicators flip bearish. And we had the MACD finally cross bullish. We had the stochastic cross bearish multiple times, but the MACD didn't cross bullish there until about a year ago. And then that's when we started to see this reversal, right? And we had that monthly lower high and lower low. And we lost the 10-week moving average, the stochastic cross bearish, the MACD cross bearish. We take a look at the moving averages. Once we lost that 50 weekly moving average, that was also an extreme concern, right? Once we lost that moving average, we just started to break down pretty quickly from there. And then we closed below the 100 weekly moving average. And once we lost that, things started to get extreme, right? We saw Tesla start to pull back. They had some supply chain issues, they said, but the media loves to find a reason of why we're down, right? And the reason why we were down, we had a death cross. We ran over 5,000%, over 50x. That's $1,000 into $50,000 from the low. Or if you did March 2020, the C19 low, that's over 30x your money, right? So nothing goes straight up in a straight line forever. And when things go down, people they get so, angry, and they don't know why. They want something to blame. And it's just look at it. We went from $1 all the way up to $66. You can't help but wonder when we're going to pull back, right? So I would anticipate a bounce. Personally, I'm not in any, I don't own any NIO at the moment, full disclosure. I'm not looking to get into NIO or Tesla or anything. I still think that we have a lot more. Again, if you're just looking for a day trade, maybe you want to set a stop under the low here at 1931. That could be, I even sent that out to POW Group private members saying that could be a great trade. Like I said, we had the POW algo alert go off on NIO on December 4th saying long-term bearish evidence. We had SPY go off, QQQ, and then we even had an alert for Tesla. But again, I blasted it out saying this wasn't a bad entry here in NIO, looking for a test off $20. Based on how much we pulled back, we're now down over 50% from the monthly lower high. Likely going to anticipate a bounce soon. And again, I think that the S&P 500, check out my video, Is This the End? I did a video saying that I expected the S&P 500 to bounce. And CNBC came out with an article when we hit 420 on the S&P 500 on Monday. It was a wild week. And I said, oh, bottom's in. CNBC said there's a bear market, right? And I was already flipping bullish at that time based on how beaten down we were and a few other factors. You can check out that video if you want to learn more. But I was expecting a bounce, and then here we are. SPY bounced, all the way back up to 444, and we're working on a daily trend change and uptrend here. So things can change in a hurry. And like I said, the NIO chart is, like I said, if you want to enter for a swing trade, I think a stop below $19 and look for a bounce up to that $25 to $30 area, the most likely scenario. But again, we could jump as high as about $40 here and just be looking for that lower high. We could jump all the way up to this lower high, about 125%, and still be in a monthly downtrend. So still lots of work to go on NIO. And like I said, if we just take a look at Tesla, it was pretty much a similar thing. Tesla had already been consolidating for 2 months. So that was the signal, right? We had the SPY alert go off. And if we just take a look at, for example, at SPY, well, I won't bring that up an effort at a time. The video is getting a little long, but I do want to bring this up here just to compare the .com days. If you take a look at the low here from 2008, essentially the end of the bear market, and this huge bull run that we've been on ever since the housing crisis, you got to wonder when this is all going to come crashing down, right? And if we overlay the blue chart here, which is the .com run up and bust, it's fairly similar, right? We had around the same amount of upside. Even there was some similar dips in there. You can see we dipped here, we dipped here, we dipped here. That one was pretty much identical. And then if we take a look at the black swan event from C19, we just ignore that because that was a black swan and the prevailing trend was up. And then what do you know? We continued to go up. I'd been calling on 500 on SPY. We even had a monthly bull flag back here that was confirming. And if we take a look at the target, there was 500. So we're just confirming that monthly bull flag. And here we are. I think we could see one more relief rally on the S&P 500. People are going to think we're going to 500. We're going to new all-time highs. And that's when we get the reversal. And if we take a look at what could potentially happen, what happened in the .com days, keep in mind we're a lot higher than we were in the .com days. And this is the everything bubble of 2022. Everything has completely, ballooned. And if one thinks about how long that bear market was back in .com, that was around 2 years. I think we could enter 2 to 3 years worth of bear market on the S&P 500. Doesn't mean we're not going to see any opportunity for some bounces and lower highs, but the prevailing trend for the next couple of years, in my opinion, is going to be downwards. We're going to likely see a multi-year bear market. This isn't a spread FUD. This is my opinion. Let me know in the comments below if you agree with me. But again, what goes up must come down, and eventually this over a 12-year bull market is going to come to an end, and we're going to enter a multi-year bear market. We've had these huge dips, right? We've had these massive dips, but we never confirmed, a monthly downtrend and then a prolonged downtrend. We had, these dips here from 2018, and then we just continued, bounced right up, V-shaped recovery into a new higher high, and then we had the black swan event. So again, if we ignore that, we didn't really enter a bear market. So I think that is likely going to come at some point over the next couple of months. We're going to enter a bear market. And if we take a look at the range here, what we could potentially expect, ignore the dates, just count the candles, it ends up being about 2 to 3 years. And again, this is a potential range of what we could expect as a drop. Again, history doesn't always repeat, but it rhymes. And if we could potentially expect something that happened similar to the .com, we could expect a drop down here to around the 200 to 290 area. The 300 area, between 300 and 200 on the S&P 500 is somewhere to find a bottom, in my opinion. And again, I could easily see a drop to 300. Just remember where we were here at 218 in March 2020. And then we ran, remember when everybody was saying here when we got to the previous all-time high at 339, oh, that was the time to short it. And the market just turned every bear into a bull, right? And we had the monthly higher low and bull flag confirmation target was 500. Here we are just 20 points away. We hit 480, and I even called out. I said, now is a good time to start entering some bearish positions and entering some hedges. And like I said, if I could easily see a pullback to that 300 area, which would be significant, in terms of pullback. But we could easily pull back to around that 200 area as well if we enter a multi-year bear market. So personally, I'm only comfortable longing to invest in MJ at the moment. That's really the only, and maybe a few altcoins. But over the next couple of months, I'm going to be looking to sell my altcoins, if not most of them, but probably 80 to 90% of my crypto. And then I'm going to be rotating that more into beaten down MJ. I'm already starting to dollar cost average and build long-term core positions in MJ. And then I'm going to be looking at an S&P 500 short. Once we see this relief rally, I've already added, I called out on December 27th. I did a video, is this the end? Check that out as well. I said now wasn't a bad time to start entering short positions. And sure enough, we dropped all the way down to 420 from 480. That's 60 points shaved off of the S&P 500. Again, don't have a crystal ball. It's just the most likely scenario. And I'm going to be looking at a long-term short position on the S&P 500, and I'll look to potentially see, I'll probably hold it until at least 300 on the S&P 500. So again, this isn't to spread FUD or fear or uncertainty or doubt or anything like that. This is just to me being real with you guys and saying we had a death cross on NIO. We lost the 50 weekly moving average. We lost the 10-week moving average. We had the macro indicators flip bearish. We had a bear cross there. The S&P 500 has been on an absolute tear for over 12 years. We've been on an absolute tear since March 2020. And one thing you can look at on the NIO chart, what happened when NIO lost its monthly uptrend, right? Once we had that pattern break on NIO and we lost the previous monthly candle, we had that huge consolidation. So again, once we lost that low, that was the signal. And then if we just compare that to the S&P 500 here, well, the S&P 500 is finally starting monthly consolidation. So again, if you were to just exit those positions, those long-term positions, there's a good chance it's probably going to play out like the NIO chart. And I do think that we're going to hit oversold on the monthly time frame on a lot of names. Tesla just barely coming out of monthly overbought. So nowhere near monthly oversold, right? We could see a lot more downside, and I could easily see a pullback to around the $500 area on Tesla, maybe even as low as $250. So again, let me know in the comments below if you agree with me. I am very bearish over the next few years on the broader market. Again, focusing more on MJ. Hopefully you've got some value out of this. Hopefully this can help you better prepare. Again, no one has a crystal ball, but if you can look at this chart, maybe you were, just looking for that signal of the monthly higher low every single candle breaking, and then you were looking to re-enter cheaper, or maybe you're looking at the S&P 500 around 480 and you were shorting it and you were hedging it, right, just to offset some of that risk and that downside on some potential individual names. So hopefully that helps, and thanks for joining us on the Pursuit of Wealth. We'll see you again soon for another video. Make sure to smash the like and subscribe to the channel on your way out, and take care. We'll talk again real soon.